Good morning. It is Thursday, May 25th, the day after D-Day. I will obviously talk about NVIDIA. If you didn't tune into the live broadcast on YouTube, if you didn't listen early in the day yesterday, you missed it. Your boy called it. It's second day in a row. First day I called Pan W, Palo Alto Networks. Nice move. Great return. Great company. It sticks with the thought process. Good company with good earnings, with good management, with good products. If they hit a certain level, they're going back to that level. NVIDIA, same thing. We'll talk about it a little bit. But if you didn't tune in, you probably missed out. So at some point, I'll do a video as to how I view using my podcast. Obviously, I think I teach a lot. But there are certain times and things where you do want to be, if I'm pounding the table over and over and the title is the same thing, you probably want to take a watch in that one. So hopefully a bunch of you got in. I know quite a few of you did. I personally, there were 10 lots that I wanted to buy. And when I say lots, I just mean that, I was dollar cost averaging in. I wanted under $300. So the first lot that I bought was live on YouTube. Second lot that I bought, I think I may have bought it on live on YouTube, but I dollar cost averaged in. I think I got $298, $299, and maybe $299 again. My total holdings that I had identified what I want to put into NVIDIA was 10 lots about. So I only got about 30% of what I want to own. So I missed out. But do not, I'll go over this. It's not too late to, you didn't miss out. You missed out on a lot, but it's not like you missed out on everything. So I'll go over my thoughts on NVIDIA about that and stuff. But just realize I do think that there's a way to listen to my podcast, understand things, learn. But when you see you don't even have to listen. Just look at the titles that I put up. And that'll kind of tell you which stocks that I think are going to move. But wanted to start out with, I had a great Zoom call with a guy named Bill Perkins. And he wrote a book called Die with Zero. Guy is amazing. My guess is, and I just looked it up on the internet, his net worth is somewhere around $120 to $300 million. He doesn't make it public, but he was talking about having $1 million in safes all around the world and having, $10 million in cash and blah, blah, blah. I mean, it was a great call, but super inspiring. Some of the things that he talked about, I think listeners can actually gain from. So my project for you is go to ChatGPT and summarize the book, Die with Zero by Bill Perkins. Read it. If the philosophy is something that you think you'd like, read the book. Again, it's Bill Perkins, Die with Zero. That's what I did. I actually wound up going to ChatGPT rather than reading the book. I think I may read the book later. He was that inspiring. But essentially, Die with Zero is, you spend your entire life accumulating money. Well, what do you do with all of that money? When do you start drawing down? When do you start, quote unquote, having fun? And one of the things that he stuck with me is, a lot of people within my age range say, my parents, I wish they would do stuff. And he was talking about how his mother's 80th birthday came up and they had to kidnap her to take her on a vacation to Ireland. Now, mind you, it was a first-class vacation, flew private, the whole thing, and they still had to take her out of her house to do that. And he said, if you think you will not be your parents when you get older, think again. Genetics are super strong. You will probably be the exact same person doing the exact same thing. And if you think your life at retirement is going to be a Carnival Cruise Line ad every day of your life, you better make a lot of freaking money if that's the case. So, you got to plan these things. And he said a lot of people, work 40 years and then they say, well, for the next 20, I'm going to have fun. Well, for the last freaking 40, didn't look like you had too much fun working. So what do you think is going to change about your life? And that's when people the eye-opening stuff. And I think I've talked about it on my Fire podcast before about how you have to plan and retirement isn't all that change of life is difficult. So again, Bill Perkins died with zero. But let's go into some of the earnings. The first one I want to talk about before we get into NVIDIA is Snowflake. Your boy owns Snowflake. Snowflake is down 15%. 150 looks like a support level for this one. 150 is right here on the charts. I think this one, when it goes under 150, I think you buy it. I think when it goes over 150, you look to sell it. I was looking at 180, but it looks like 180 is probably a resistance level, not necessarily a support level. Remember, when this one IPO'd, and we'll go back all the way here, I'll pull it back to its IPO. I think I can do this on the 4-hour. There are gaps above this. There are gaps below this, but I think that the gap below it is probably slightly strong. So I would probably, if I'm going to add to it, I'm probably adding to this. They brought up AI a shit ton on their call. It is clear and obvious they are hyping this one up. This was I think it went to $400. Let's look at the weekly because it's a relatively new stock. Yeah, here. This candle right here went to $429. Just realize it didn't deserve that whatsoever. You're not getting to 429 in the next 6 months at all. This isn't NVIDIA that has earnings. This is a super expensive stock. Super expensive. You look at the PE, which they're not making money, but the forward PE is 175. They have to grow into that. Well, they announced a bit of a slowdown. They didn't quite make it to 200. They got killed on the earnings. It should go back. They missed on revenues. They beat big on earnings per share, but their product guidance was below what they had mentioned before. They mentioned AI a bunch. Remember, there's a subscription model in this where it kind of, part of their allure is, hey, we're going to charge you as you use more data kind of stuff. So I just don't know that, you're going to get your money back this year. But if you use that 150, I think you've got enough of a support here that it's good. My goal, I think my average purchase price, I've been dollar cost averaging. I think I'm near 180 because I've dollar cost averaged down. And again, I'm going to add at 150. I just think it's a good enough company that you could do it. This is a choice between I chose the loser, Palantir was the winner. And I think if you're starting a position and you just want long-term, I think Palantir is probably your best bet in the short term, meaning that I think that $12 stock in Palantir goes to $20. They announced that they may actually be making money in the next 6 to 8 months. So I think this one, that's where you saw the pop. Kathy Woods added to hers, I think at 10. You're at 1274 right now. You're up 5%. I would, if the RSI is a little high, I don't know that I'd add here, but if you get down in the $11 range, I think you can absolutely 100% add to it. Snowflake, I think in the 150s, I think you absolutely, look to add it. I don't think you're getting back to that 400. Again, there's a bunch of factors. I say a good company with good management, with good products and good profit. That's where you want to be. The profit on Snowflake and Palantir isn't there, but I do think the other three are absolutely there. So let's talk about NVIDIA. And I wanted to wait until the market opened up so that you could see the current candle on NVIDIA. And it's already pulling back. You got to $400 in pre-market. Right now it's at $370, $369. Could you get it? If you get the chance to buy this at $350, take it. Add to your position at $350. I don't know that you're going to get it, but we always talk about how gaps are very, very kind of almost magnetized. This closed at 305 yesterday. So you're down here yesterday at 305, right where that kind of yellow line is. Right now, the low is 366, and it's rising again. You're going to have an enormous gap. Will it come down to that 305? I don't think so. Here's what you have to know. Revenue estimate for yesterday, NVIDIA, $6.5 billion. Revenue actual, $7.2 billion. That's enormous for a company this size. That is an enormous increase for a quarter. Estimate adjusted earnings per share, 92 cents. Actual, $1.09. Crazy gap there. Estimate for gaming, $1.9 billion. Actual, $2.2 billion. Here's the one that I thought was the biggest. The estimate for data center, $3.9 billion. The estimate for the actual for data center, $4.2 billion. $300 million difference between the estimate and the actual. That's enormous because AMD and the other data center chip makers, they actually announced that there was some weakness. So the thought was NVIDIA was going to have weakness. Well, where'd it go? It went to NVIDIA. So make no mistake about it, NVIDIA is a $400 stock before the end of the year. It hit $400 in pre-market. It will hit $400 again. A company with good management, with good products, with good earnings, it's going to get back to that price. So if we go back and we're going to take a look at a weekly of NVIDIA just to see where the top is. I think it was yesterday I said, here's the top, and it was about $400. No, it's at $350. So the top was $350. You shot past it today. So you're in all-time high range. Do you take profits? What do you do with this? I identified $350 as my target. So I'm kind of a little bit torn. I'm in again, I only got 30% of what I want. The problem that I have is that I bought it in a brokerage account. I was trying to decide, okay, do I want it in brokerage? Do I want it in my Roth? Do I want it in my IRA? Do I want it in my HSA? I've got some tax, because I bought it in brokerage, I've got some tax implications. If I was in an IRA or I didn't have a tax situation, I'd probably put the sale price in at $390. I probably would have sold it in pre-market, to be honest with you. At $390, $395, somewhere in that neighborhood. But it's just, again, it's flown up. You look at this weekly chart. I mean, this is December where it was trading at 144. You've more than doubled your money at this point just from January. And you're not even 6 months in. You're only 5 months into the year. So in my mind, I think you should, if there's no tax implications, take a little bit off the table. I disagree with Kramer in that this is a never sell stock like Apple is. I think Apple, you just don't know when to get back in. I think with NVIDIA, with that gap that you're going to see today, you do know when to get back in. I think 350s is when you get back in. Even if you sold at 378 right now, I think when this hype dies down, you come back to those 350s. I don't think you'll get this in the 200s again. Unless for some reason, maybe China invades Taiwan. Maybe there's a shutdown of NVIDIA where they can't sell chips to China. Maybe something happens. I just don't see you at 300 again. It's too good of a quarter for them to do that. And the other thing is, look at the other stocks. Taiwan Semiconductor I have in our core portfolio. It's up 8%. It's at $98. Remember when this one was in the 70s? The low 80s, just like a week or so ago? This one has gaps all over the place. It will come back down here to the 80s. 100% it will come back down here to the 80s. May 10th, it was at $83. I said, maybe it's lost its Buffett magic, blah, blah, blah. But you know what? You know who manufactures all these chips? Taiwan Semiconductor. And you know where they are? They're in Taiwan. So there could be a problem. But Taiwan Semi, I wouldn't buy it today. I would wait for it to come back to its 200-day around 88. But are you getting this in the 80s again? That's kind of a toss-up. They're going to make these chips. They make the Apple chips. They make the NVIDIA chips. I mean, they're the ones that do it. Intel isn't doing it. Intel doesn't have the technology and the foundries to do it. So NVIDIA also lifted up all AI stocks. And I want to make this point with one stock in particular. But you can see Google. Google is up 2% right now. I think they were up as much as 3%. But Google, you're still in that 4-hour algorithm. So it's not one that you get, you kind of dump, just hold on to it. Microsoft is up 2%. This is all NVIDIA. AMD, which I don't think is in the core portfolio. No, I don't have in the core portfolio, but I do own this. I think I own it at about an $80 price target. I want to say, no, I'm sorry, it's 90, 92, 91, somewhere in that neighborhood where I kind of have the average. It's up at 116. This one is up 7.47% in pre-market. I'm sorry, in the market. Now, the one that I want to point out, and the reason I know this NVIDIA is all AI stocks, is the symbol AI. We talked about AI back here, May 1st. You can see these gaps back here around April. This was when a quote-unquote Hindenburg, and the company's, it's not even a quote, it's a company called Hindenburg. If you want to Google it, just do Hindenburg C3 AI, and you'll see the report. They called them an absolute fraud. And anybody that's watched the CEO of AI, C3 AI, knows that I think he is a fraud. I mean, I just don't think the guy knows a lot about AI, but they do have a company. It is worth a lot of money. I don't think that they're making money, but let's see. Let's see. No, they're not making money, but it's a $3 billion market cap. Their income, they lost $262 million. They only had $266 million in sales. So they're spending a tremendous amount of money, but the Hindenburg research said, yeah, it's crap. The company's fake. They're doing all kinds of accounting stuff. Boom, down here at 18. That's where you got to buy at 18. Now, if you bought at 18, fantastic play, fantastic buy. I said, I don't know, it just worries me. The CEO just doesn't seem to know what he's talking about. So, this is how I know NVIDIA is lifting all AI. It is up 5% today. There is no reason for this to go from 18 to 30 other than the AI bubble. You are still in the AI bubble. That is why I'm holding on to my NVIDIA stock, is because you only get rid of your NVIDIA stock when the bubble's over, because NVIDIA is leading this charge. So NVDL, we talked about NVDS and NVDL. NVDL, the long, you can see, huge gap. This one is up 35%, whereas NVIDIA is up 23%. This is the long one. It's up 35%. This one, I would absolutely get out anywhere in the 70s. Get out because it's going back to the 60s. If you want to buy this one, it's a 1.5 times NVIDIA daily ETF. So you can absolutely trade this one. If you got into it, kudos for you. One thing I will be posting in the private Facebook group is, and I'll post it probably on Twitter and Instagram too. I was taking a look when I was buying NVIDIA yesterday at some of my stock mixes. I was rather shocked. I am 92% invested, which means I have 8% cash sitting on the sidelines. And if you don't know, Fidelity allows you to put your money into bond indexes, and you use it like cash, but it gets a 4.7 to 4.9% yielding, 7-day yield. So I'm okay being 8%. Typically, I'm 95% invested, but 92% I'm okay with because I'm getting 4.2 to 4.7% guaranteed. And it's no risk because it's just sitting there. But my sectors are what shocked me. So information technology, 72%. Consumer discretionary, 13%. Now, consumer discretionary, if not for the home builders, if not for Amazon gaining and a couple of other stocks, yeah, consumer discretionary would be down. Communication services, 7%. If you ever looked at boxes where you got the market cap on the left, small, medium, and large, and then you got valuation on the bottom, value, blend, and growth, typically you want to be kind of in the middle. I am 86% up to the right, which is large growth cap. So those are two ones that I want to post so that you guys can see the way I'm invested. It is the way I've been invested for 20 years. It has worked. I don't know that it will work in the future. It hurt me last year. It hurt me hard last year. So I've moved more towards the blend. Prior to me rebalancing some things last year, I was significantly further to the right, more in growth. But I have moved over to the blend side. It's right on the line. And I'll post those pictures for you so you can see. American Eagle Outfitters, I talked about this one. I said, hey, with Abercrombie and Fitch and some of the other clothing manufacturers blowing it out yesterday with 30% pre-market gains, this one may be an opportunity. They just suck. American Eagle Outfitters sucks. I mean, I talked about 40-year-olds with 18-year-old girlfriends driving around in Mercedes in convertibles and stuff yesterday. American Eagle Outfitters, you're not even going through a midlife crisis if you get that. You're just a poor teenager, it turns out. So American Eagle Outfitters out the door. If you want, I think American Eagle Outfitters does come back up from this $10 range up to probably the $12 range once everything's ironed out. But it's just probably too risky. I mean, you look, 37 cents per share back in March to 17 cents per share. More than likely, and remember, it's a clothing brand. So clothing brands go by fads. People probably hate American Eagle Outfitters. So realm, good product. They may just not have a good product. They may have great management. They may have good earnings, but they may just not have a good product. So in my personal opinion today is Costco is going to be the differentiator. If Costco comes out with weak earnings, I think you may see some of this market. Again, we're in an AI bubble, but I think you see some of this market take a tumble. I'm seeing Devon Energy down 1.75 to $48. I think you're seeing some of the numbers here indicate that the Fed's going to have to move again. I'll talk about that in a little bit. But Costco will be the key for consumer stocks. If we get a good Costco read today, we've had the NVDA for the tech earnings, and then you get a debt ceiling deal sometime this weekend, I think Tuesday you see just we're off to the races. You're going from 420 on SPY, you're going up to 470. I just see that kind of, and it's not going to be overnight, but I think you continue that slide, climb up. But Costco, make no mistake about it, if you see Costco with downed earnings, if you see Costco say anything about a weak consumer, I think that brings this market down even more. Now, SPY, I've always talked about the weekly kind of being in this upward trajectory, and it's bounced off this 420. Right now, you're at 412. You're up 0.41%. It's a red candle, and it really doesn't have a ton of confirmation. You're just stuck in this trading range, and the trading range right now is between 410 and 420. At 410, if we break that point, I think you're going down to 400 on SPY. Jobless, and when I talk about the economy, jobless claims came in less than expected. Continuing claims were down less than expected, and they revised GDP up. Both of those mean that the job market is strong and that the economy is strong. So in the past year, we've seen this. What does that mean? That usually means that the Fed will raise rates. Well, right now, the market is pricing in no raised rate in June. The Fed minutes came out yesterday, and the Fed governors were totally mixed about what to do. Should they raise? Should they hold? Should they pause? They were totally mixed. You will see a mixed Fed governor meeting this time too. And it's even murkier because, again, all of the indicators are telling them that the economy is strong and that the consumer is strong. If that's the case, maybe they need to raise again and shock the market. And I think you see it go back to 400 on SPY at that point. But again, we just don't know. You're going to have to wait. You're going to have to read the tea leaves. Just know if you do have risky stocks, in my mind, if you have the Palantirs, if you have things like that, and you have big gains and you're in a tax position where you can sell without a tax event, a negative tax event. And I say a negative tax event, meaning that you're going to pay short-term taxes instead of long-term capital gains. I think you look at trimming some of those. So that's just my thing. In looking at FinViz, I always look to the bottom right of the homepage to see the insider buys. And David Nanis of EVgo bought $6 million worth. Let's scroll down to the insider transactions here. 26 million shares, $25 million worth of EVgo. EVgo is not making money. You can see here a bunch of people back in August. There were some, nothing super sizable, but $500,000, 400,000, blah, blah, blah. They were selling at 11 and 12. Well, where's the stock today? It's at $3.93. He spent $25 million buying at $4.25. You're at $3.93. Let's look at EVgo at the chart. I don't think it has a buy signal yet. It is significantly down. Again, this is a $11 stock. Look at this. Now, what I want you to do is read up on the earnings, because the earnings went from losing 6 cents a share to losing 18 cents a share. This dude may have $500 million, so $25 million is like buying $25 worth of, gas for him. But you do have this gap up here between 429 and 460. So at 392, it's up 1.3%. If you look, here's the killer. The target price is $8.32. May 17th, Stifel put in a buy with a price target of $9. I want you to read up about the earnings before you go into this. I don't know enough. Year to date, this is down 12%. Performance for 1 year down 54%. There is nothing positive about this whatsoever. We don't know how much cash they have on hand. It's not listed. Their sales, $72 million. Their income, they lost $26 million. They only have a $1 billion market cap. They're shorted 32%. It could get into a short squeeze. That guy owning all of that stock, he ain't selling. It's 6 million shares. How much do they have floated? 68 million shares. So 71 million shares are outstanding. 68 million are out there in the open selling. I think the company just hold on to 3 million. So interesting. I found that one super interesting. Chatty from Facebook. She wanted me to look. What do you think of PMETF? Let me see. She wrote, a coworker of mine introduced me to this stock, given all the focus on EV batteries and the lithium that goes into them. Would this be a decent buy? Trading close to its 52-week high. I didn't know anything about this. I still don't know too much, so I'll look at it with you. I don't think that they're making money, but if we look at I'll start with a weekly just to take a look at the long term. So it looks like it IPO'd back here around August, around the 372 range. $3.50, somewhere around there. It went all the way down to, it looks like about 17 cents a share in May of 2020. That's COVID. It starts picking up. You've got some gaps up here around 60 cents, which probably won't get back. It has been on a bull run ever since. And that 200-day, the 50-day, the 9-day, the 21, they're all moving up. Your Bollinger Bands are cinching up, which, typically when the Bollinger Bands are cinching up, you can't really tell it on the weekly. But when they cinch up, it's going to either go higher or lower based on where it's at right now. My guess is it would be higher just because it has not gone lower too many times. Its RSI is at 68. Remember, RSI at 70 means there's too many buyers and sellers have to show up. So people will start selling. The MACD is up there. If we look at the 4-hour algorithm on this, I think there was a buy here at $8 when I first looked at it. $9.50. $9.50 was the buy. You're still in. It is a bit extended in my mind. You've got a couple of gaps around $10, around $11, which it could come back to fill. Your 200-day is positive. I mean, when it gets to that 200-day on this stock, if you get to the 200-day down to $9.30, buy it all day long. PFMET. PMETF. Hold on. PMETF. It's even hard to type in that symbol. What? PMETF. There we go. I can't find it on FinViz. I thought I found it on FinViz. PMETF. No, I guess it's not on FinViz. Let me see. Let me see where it trades. Is it an over-the-counter one? No, on the NASDAQ. Yeah. Oh, it's over-the-counter, NASDAQ. So I think it's over-the-counter. I don't know. Let's see. You can look up news on Yahoo about it. I don't know why FinViz doesn't have it. That's an interesting one. PMETF. I'm typing in the symbol right. Read up on the news and stuff. I don't know too much about it. Strike length of CVS. Earnings per share, they're losing 1 cent per share. Opened at $12. It previously closed at $12.69. So it is down. It's at $12.23. It's down about 4% today. They don't have a dividend. Here's what you have to know about this. It looks like, let me look it up in Active Trader Pro. Because what I'm worried about, So here's what you really have to know about this. PMETF, Chatty. Your average 10-day volume is 32,000 shares. Your average 90-day is 61,000 shares. You're trading at $11.90 right now. This is a super small cap. This is micro cap. It is trading next to nothing. So when you get in, you're going to have to trade. It's going to be tough for your brokerage to actually sync this up to a buyer and seller. So it's going to take a while to actually get rid of it. I would probably hold off. I don't know that I'd necessarily get into this one. I don't know enough about it. Patriot Battery Metals. It's just, for me, again, I'm in large cap growth. It's probably just too small for me. Sam from Facebook, would you mind taking a look at Lux Urban Hotels, LUXH? Might not be a terrible play for the summer months. LUXH. Let's look at this one. Great 6 month. $1.80 was the buy here in February. The volume shelf levels look like they're expanding out around $3. You're at $3.50. Let's see. LUXH. Here's the way I see it. You're not making money. Your forward PE is $6.37. Your sales, $54 million. You've lost $13 million in the last quarter. It's small, if not smaller. I think you might be on the right track that, hey, hotels might get booked up. I think it's just too small for me. I mean, I'm seeing the buys, insider buys at $3.54, $3.60. The average price target is $8.50, and you're trading at $3.63. Nobody's really covering it because it's small. You're 20% above your SMA, your 20-day SMA. Here's the way I look at small caps. Do I know enough about them? Is there, they swing huge. Specifically, a hotel with $98 million that's losing $13 million in income. Do I think that all of a sudden they're going to start making a profit? What makes me think that? I mean, that would be where I would go. Year to date, they're up 113%. 6 months, they're up 143%. Probably a good trade in my mind. And again, remember, I'm a tech investor. So Lux Hotels, I just don't know enough about. Does it interest me? Nah. You know why? Because what's driving this market? Artificial intelligence. If for some reason Lux Hotel says, you know what, we developed an AI app for hotels, that would interest me. Other than that, Sam, I'm like, it's run a bunch. Even though the price target is $8.50, I could be completely wrong. I've never stayed in one of these hotels. I don't know anything about it. So I would say, for me, I'm staying away. Netflix, I wanted to reiterate this. Netflix, they're starting their crackdown on passwords. They are down 1% in pre-market. In the actual market today, 1%. It's a green candle. It opened up at 359. It's trading at 360, so it's not really holding on to gains. It is overextended on the RSI at 59. You have no rush to buy this. I think if this gets back into the 340 range, there's a gap between 340 and 345. I think if this gets into the gap at 340, I think if you get a 3-4 handle on this one, you absolutely could buy it. I think they have enough gaming. I think they have enough content. Here's what you have to know. They're cracking down on passwords. For every one paid household, they have 5 additional users. If they just get one of those users, it's 20% increase. I think they have opportunity there. I want to pound the table on this one. I have not entered it. I will probably wait too long, just like I did for NVIDIA, to get into it. But I think you have an absolute opportunity. And the reason I think you have an opportunity is this weekly chart here. You're, again, good companies with good products, with good management, with good earnings tend to go back to their price. This was a $700 stock back here in November. You're at $359. I think if you get to that $340 price, I think you could buy it, thinking that maybe in the week on the weekly we get to $407. If you look at Netflix, and I'll tell you, it's going to be tough for Netflix. Their average target price is $361. So you're buying into strength here. But here's what I see. I see Netflix going after the passwords, increasing their actual revenue. They might not increase users because, again, you can add on family plans and blah, blah, blah. But they'll add to their revenue. They're also going to be saving money. And the reason they're going to be saving money is probably a reason that you don't want, but the writer's strike. They're spending less money. So they're going to spend less money, but they're also going to make more money. Typically, that's what drives a stock up. Now, what you want to hope for is that they do not, and absolutely do not, have a mass exodus where people just leave Netflix. In my mind, I think people need something to watch, and I think Netflix is the leader. It's the only streaming service that people will have, and people have listed. It's the only one that's making money. If people leave this, they'll go to another streaming service. So maybe it's WBD, maybe it's PARA, and you can see gains in those. But I just think Netflix, as the key leader, has something that others don't. And Netflix, by the way, it's definitely by far, technically, the absolute best technology that I have on streaming. Just my personal opinion. Okay, scans. First one that came up is one that I absolutely love. It's UNH. Your boy is holding this at 485. It has a trigger at 481. It has a descending wedge. It covered this gap down to 475. I don't see this one going way lower. It could get to 460s, but I just think they will absolutely continue between this 480 and 500. I stick with the 500 price point. I think that's good. KOLD. There still seems to be some weakness in natural gas, and KOLD is the play on that. 65.57 is where it's traded. It's at 66.58. FAZ. This is a triple levered bear, 3 times bear on the financials, indicating to me we may still have some banking issues, but because a bear, remember, it's 3 times levered. So when the bank stocks go down, this goes up. 22.69 is the buy on that one. HIBS, which I think is the mid cap. It is now S&P 500. It is the bear 3 times S&P 500. $5.53. You're trading at $5.38. May have just been a negative. You might be in for a loss on this one. Remember, these triple levered ETFs, they're tough to trade on a 4-hour. I would rather see you trade them on the 65-minute algorithm. But SQQQ, another triple levered one, Got to buy here at $26.98. There is no way with NVIDIA up as much as it is. This one's down at $25.36. So TQQQ probably was the buy. SMDD, that's the final one that we have. This is the mid cap 400. It is triple levered. It has a trigger at 2180. You're trading at 2192. So any questions, hit me up. If you're paying more than $25 for your cell phone service, down below there's a link for WEBULL that saves you $20 off your first month. So your first month is $5 because you're only paying $25. It is unlimited. It is on the Verizon network. It is the service that I personally use. So I love it. If you're paying anything more than $25, you're out of your mind. Sign up below. Other thing is TrendSpider. I probably should have let off the show with this. It is still 50% off. So if you use the link down below, you'll not only get my algorithms, you'll get the watch list, and you'll get the scans that I use every day. So my preference for anybody is if you have anything more than $5,000 that you're actually trading, I think TrendSpider would help you. It is just under $400, so I don't think spending 10% of your actual portfolio, I think you can make that back with $5,000 in no time using TrendSpider. Remember, TrendSpider doesn't guarantee you will win. It's just another tool, and it's a paid tool. It takes emotion out of the trade. The other thing that it does is if you have a full-time freaking job, you can't sit there and watch charts. So you can get texts and email. If you set up these strategies, just text and email. And so when it texts you, you'll get that text. I love it. I get texts on the 4-hour algorithm. You get them at 12:30 in the afternoon, and you get them at 4 o'clock. The 12:30 text, usually during everybody's lunchtime, you can pull out your phone and trade if you want. So I do like it. The link down below, it's DSP25. It saves you 25%, but if you just go to that link, you're going to save 50% through the weekend. So any questions, there is a link tree down below. If you made money and you had NVIDIA, throw your boy a bit money. Let's see. NVIDIA is back at 380. It went down to 360s. Let's see. The current candle, 366 was the low. It got down there. I think it's a $400 stock by the end of the year. So I don't think any time that you buy this, I think the AI hype is real. The train is on there. You should be on it. If for some reason you're investing in small caps and you're investing in crazy little stuff, don't. The AI train is still going. And it will still go until further notice. So that's my advice. Hit me up down below with anything. The link tree has all of the links to my Cash App, my PayPal, my Venmo, whatever you want to use. And it also has a link tree for YouTube. If you're not subscribed, subscribe. I do this every morning. I give you ideas, give you alerts. I've done really well with Palo Alto Networks and NVIDIA the past 2 days. There are plenty of losers that I also do. You're not going to win 100% of the time. I don't care who you are. But again, I'll post in the private Facebook group those charts that I said about my stock analysis, my personal portfolio. And if you have any questions, hit me up. Okay, that's it. I will talk to you tomorrow.